at the heart of financial innovation. This discussion, moderated by Mr. Shalya Gupta, CEO, Credifin, will focus on transforming customer engagement strategies. Our panelists include Mr. Himanshu Gupta, CEO, SMC Finance, Mr. Vikas Arora, EVP and Business Head, Shriram Finance Limited, Ms. Anamika Chatterjee, Head Customer Service, Hero Fincorp, Mr. Divaker Jha, SVP and Head Products and ORG.Excellence, Spandana, Sphoorty Financial Limited, Mr. Ankit Mehra, CEO and Founder, Gyandhan Financial Limited, Mr. Vineet Sharma, Director Business Development, Leadsquared. Please, can I have you here on the stage? I would request all the panelists to join the stage, please.
So, I think we have a very great panel today. The customer experience has been the center focus for NBFCs and Fintechs for a very long time. And it's not a question when it is happening, it is, or if it has to happen, it has to happen now. In today's world, the focus is not about, and the competition is not on the fact that which NBFC or which Fintech, we are not competing with each other. We are essentially being compared to the Amazon, Netflix, and Uber of the world. So the customer experience has to be seamless enough that it is equivalent to how platform would work, the sign-ups, etc. will happen in Netflix. That is what is expected from NBFCs and Fintechs as well. So before we deep dive into the questions, I would request everyone to take 2 minutes to start off what they've been doing and what has been their experience in this space. So Anamika, over to you.
Thank you. Hi, good afternoon. Namaste. My name is Anamika Chatterjee. I'm working with Hero Fincorp for past 3 years. I'm heading their customer experience for the retail loans. And overall, when it comes to my experience, I have been into the BFSI segment for a little less than 2 decades. And I have diversified into multiple products of BFSI if it comes to credit cards or investments or lending or let's say insurance. And have been managing experience part only. So I'm a customer experience evangelist, and here I am to share a few of my insights about the industry. Thank you.
Good afternoon. This is Divaker Jha, representing Spandana Sphoorty Financial Limited. We are a microfinance company, and what my role is to innovate products on daily basis, and the process excellence part, which is a key critical part in microfinance. And over a period of last 2 years, we have implemented lot many solutions in terms of ease the life of staff as well as ease the life of our customers. So that is going to be a critical, factor to enrich the microfinance industry going forward. Thank you.
Good afternoon, everyone. I'm Himanshu Gupta, representing SMC Finance. I am CEO and director over there, and we are primarily into SME lending, apart from few other products like gold loan and onward lending to other NBFCs. Thank you.
Hi everyone, I'm Ankit Mehra. I represent Gyandhan. At Gyandhan, we are in the business of education loans. We help students get loans for higher studies abroad in a marketplace construct, and through our NBFC, we help students who are looking for loans in upskilling segment. What you were mentioning about customer experience, I think that's something we also see, because especially in the edtech segment where sales have to be done quickly. We have seen in the past where we worked with bigger NBFCs, but the edtech player refused to work with them, saying we want other partners who will be more instantaneous. We don't want a lower rate, but we want a better customer experience.
Hi everyone, this is Vineet. I'm part of Leadsquared, Director Sales in BFSI. I've been working with clients like yours and the panelists for good 3 years now. And we help organizations design a system that delivers customer experience by default and makes them excel in surpassing the benchmarks set by the industry standards. And in this journey, we've been doing a tremendous cross-learning, and happy to be here. I'll share 2 cents of mine and learn a lot from all of you. Looking forward. Thank you.
Hi, good afternoon. I'm Vikas Arora. part of Shriram Finance Limited. So I've been a career banker, spent close to 2 decades in banking, largely corporate lending, MSME lending. Also headed a tech company into APR, an automation company, very much unheard of, a banker and a tech. But then kind of founded supply chain finance and MSME lending in Shriram Finance. I was the practically first employee who started these businesses at Shriram. So I can fairly understand the need of customer experience and customer satisfaction. Because none of the business people sometimes feel businesses can grow and they can look at focusing on customer satisfaction, user experience later on. But trust me, it is more critical to start from day 0 or day -1 rather than thinking at day 10 or day 20th. So a very pertinent subject for today's discussion.
So lastly, I'll introduce myself. This is Shalya Gupta. I am CEO of Credifin Limited. Previously, I've been a management consultant to over 50 plus banks and NBFCs. So I've practically worked with every kind of organizations from wholesale to retail, fintech, edtech, and working with 50 odd banks and NBFCs. What I've realized is that every NBFC is trying to deliver the best customer experience. Obviously, everyone is stuck with their own reality. But that gave me an insight as to the need of the customer needs to be fulfilled, and taking the conversation forward. But before that, I would like to thank B2B Media. They've arranged a very diverse panel for this session, especially because everyone is coming from every facet of the field. So I believe that we're going to have a very healthy discussion. So before we get into the question, imagine this: that you apply for a loan. In an instant, it gets approved. In an instant, the loan is disbursed. In an instant, the fraud, if any, was about to happen, has been detected, and the whole experience is seamless. We've moved away from the boundaries. We've moved away from the space where we need to have a person who understands your requirement. The AI himself knows that what do you want more than even what you imagine, right? So in that kind of a world, the customer is obviously happy. But even if we look at it today, in the underprivileged community especially, there lacks a handshake trust, right? Which happens, right? You need to work with people. So Anamika, my question to you is, how do you ensure that the trust is transferred into technological platforms and the trust is carried forward to the customer, and he understands that through applying a loan via a platform is equally good to meeting someone and applying from there?
Thank you for bringing out this point, because I think this is one of the pain points of the industry that we are working with, right? So we, as an organization, we are offering digital lending platform as well as non-digital lending platform. Now, when it comes to digital lending platform, we have built a journey for the customer which gives him complete transparency about the information that he is required to share on the platform and why is it required. It also ensures that any customer who's actually putting his details on the platform is a non-fraudulent personal, right? So we as an organization, we'll also have to ensure that somebody that we are onboarding as a customer on a platform is not fraudulent, and we are not lending that money to somebody that will not be able to recover from. So having said that, the trust is to be maintained at both the ends. We also need to ensure that we are lending to the right party. The customer also needs to be given that trust that this platform is completely secure. Why I'm re-emphasizing on the platform being secure, because we are Hero as a group, and Hero as a group has been there in the ecosystem for more than 3 decades, because they were there as a manufacturing of two-wheeler items, and when they started into the BFSI journey, it's been little more than a decade that they've been there into the space. It is very pertinent for them to maintain the brand value which they've been creating for last 3 decades or more, I would say. So initially when they started the journey with the offline mode of lending, and then slowly past 3 years, last 3 years, when they actually elevated it, or let's say transformed it into a digital space, we have built our processes, or let's say the legs of the journey, in such a manner that the customer at each and every point is given that kind of assurance that your information is safe with us. So whatever information we are taking from the customer, that will not be stored with any individual, because it's a digital space. So that goes into a safe space. Now the kind of layers that we have created as part of the security, that also gives the customer a secured feeling that okay, I am at the right platform and my data will not be compromised, because that is the first and the foremost in thought which comes to any person, be it you, me, or the customer at my platform, that is my data secure. We are giving our KYC details, we are giving a PAN, Aadhaar, which gets misutilized at every nook and corner. It is very highly possible that your details get compromised at any level, whether you're going to take a SIM or you're going to take any other commodity and you're sharing your KYC details. It is possible. So when it comes to a lending platform, we have ensured that we have layered our processes in such a manner that the customer's data is not compromised, whether it is masking of your KYC details, whether it is storing that detail into whichever space that we have to do it. And when the customer has actually given all the relevant documents and the details, the time by when the disbursal happens, and during that time, being connected with the customer. So let's say you have given me all the details today and I'm showing that okay, the loan will be disbursed to you within 24 hours. However, generally I will take, let's say, 72 hours. So that's a non-transparent information,
Right.
because what I'm telling you versus what I'm delivering to you is mismatch. So we have ensured that whatever information we are trying to give to the customer on the digital journey is sacrosanct with what we are doing, what we are delivering, so that the customer does not have to come back to the service team to just chase and say that okay, it's been 2 days, it's been 3 days, and the loan has not disbursed. Let's say some technical glitch happens. Even in that case, the customer will be intimated that okay, because of this reason your process did not go through, although you had submitted all the documents, and this loan disbursal process would be cancelled. So now you can go and apply the loan elsewhere, so that you do not have to just be dependent for days together and I'm not answering. So these are few basic things which we have tried doing at our end, so that we are able to build that trust and maintain that synchronicity when it comes to your digital lending journey.
Right. So, but again, then how do you ensure that? So, okay, I get it. Ki, educated customer or literate customer would understand that. They kind of understands, and you can have something like a video also uploaded on your platform, which is sent to the customer. That's something that we are doing. We send videos to the customer that this is going to be our loan journey process. This is going to be our payment process. But still, what I find, because we're trying to do that, and we look at organizations like yours to learn and then implement something. The customer in the underprivileged community, where the customer is essentially either illiterate or uneducated at a larger extent, how do you build that trust with him? Ki, the documents are safe with them. If because there's another problem is, again, I'll come to this question in some time. There are a lot of third-party players involved while disbursing a loan, and they have their own set of agenda. Right. Then how do you tackle that in an underprivileged community specifically?
See, I would not be able to cater to the underprivileged community as a question, because we are offering loans to a segment who are taking two-wheelers from us, to a segment who are taking used car loans from us, who are also taking personal loans. So my target users are very different. Somebody who's taking a loan for 75 to 80,000 and it's going up to 10 lakh, or let's say a 12 lakh for a used car loan. So my target user is varying from stages to stages. So when I'm disbursing a loan and you're talking about a third party, so let's say I'm talking about a non-digital mode of communication, so when the customer, a two-wheeler customer, is walking up to my branch and he's saying that okay, I need this kind of document, and he's not the customer in actual and he's a relative, or let's say some third party who is related to the customer, we will not be sharing any detail. We have those mechanisms in place which will say that okay, you are a third party, we cannot disclose any information till the time you give me either an authorized letter from the customer which states that you are related and I'm supposed to share that information. Maybe that, or let's say he is giving me the KYC of the customer, saying that look, I have the PAN and the Aadhaar of the customer, and the customer has handed over this information to me, and now you have to give me his loan statement because he cannot travel and I am representing him. Even under those circumstances, we will be making a call, on a recorded line and try to speak to the authorized party who is my customer, then take a consent and then hand over. So I have the KYC which tells me that the customer actually tried to retrieve his loan details from a third party. So I have his KYC. I have a representative. However, I also have a recorded call consent from the customer which tells me that, okay, you can give it on my behalf. This is about a process where the customer is walking in, or let's say a representative is walking. Let's talk about a scenario where the customer or somebody else is just calling me on the hotline and trying to retrieve some information. Over there also we have put a lot of layers that, okay, you have to give me this detail, that detail. Let's say you're not able to verify certain information. We'll dig deep, and in case if you're not able to validate the customer's identity, we will not be sharing the information. We will not deviate, come what may.
Right. So that's a great point, and I think we can deep dive into it further.
I think just to add to your last point, what we also do is only whenever it comes to digital mode of communication with the customer, we only deal through the registered mobile numbers or registered email IDs. That is, very basic check that we have put in place.
Right.
Or otherwise, customer has to be, come in person and we again, validate the KYC.
Right. That's a great point, and I think we can more deep dive into it in a bit. Himanshu, next I'm coming to you only. Today in today's time, the customers are not looking at having a financial service in play. They want a financial experience. They want the lender to understand what their needs are. And so let me give you an example. At times, this is something that we do on a physical level, right? If a customer is asking for a home loan, construction loan, we understand he's asking for 5 lakh rupees because he thinks that amount is relevant for him, but sometimes it is not. He actually needs something like a 7 lakh rupee, and then we explain it to him. We make him understand you need 7 lakh. Now, on a one-to-one level, this is possible and this is doable. But when it comes to technology doing it for the customer, there are two critical points. One, is the technology evolved enough, and will it soon be evolved enough to do that and take those calls? Because it has two elements to it. One, the customer feeding the right information, or you assisting the customer to fill that information. And does that increase the OPEX? The more important and pertinent question right now is that it is all about data privacy and security. If I am feeding all of that information into an ecosystem which is under, which may be secure, etc., it is still breaching the line of privacy and and control. So how do you take that, and how do you tackle with it, and what is your view on that?
Okay, so your first question regarding the example that you quoted, that customer is applying for 5 lakh rupees, but is system intelligent enough to tell him that you need a 7 lakh rupee loan? So at present the STP based underwriting or disbursements are only happening for the small ticket personal loans, wherein usually the end use is not asked for or monitored to that extent. So as of today, the technology is not supportive, and most of the time, the loan which is approved is usually lower than what the customer has asked for.
Right.
So and even in the physical world or digital world, usually the underwriter would usually understand the end use or the requirement of the customer. So but coming to your question, I think in future gradually, as AI and things like that are coming up, so lot of intelligence would be there in the underwriting systems, and the system would, I believe, that be intelligent enough to decide on such kind of scenarios. Number one. And number two, regarding the cyber security and data privacy aspect. So what I believe today, the regulations and the laws of the country, they are ahead of time. Whether you call it from the regulatory perspective, from the RBI, or from the the central government laws regarding the latest one, the DPBT rules. So they are very up to the time, and in fact NBFCs and banks, they are struggling to cope up with that. That is
Right.
that is the truth of the time. So, the regulators are well ahead, and I don't see that as a challenge today.
So
But
I agree.
Yeah, having said that, I think there would always be, misuse of the data.
Right.
And
Right. No, I agree. India has one of the best ecosystem when it comes to data privacy security. We are the first movers into understanding, what can be breached even from external, outside the country boundaries, etc. But the concern is on two occasions. One is the technology that the NBFC, let's imagine a company which is 200-300 crores. Can they effectively protect the data of the customer? Because protection of data and the cyber law security is a very expensive endeavor, which actually creates a huge bump. Secondly, when we get into a financial experience space, the second concern from the customer's end is that is the customer also willing to tell you everything? There was a funny example which happened. I don't know if it has happened or not, but again, it is in pipeline. So through Digi Yatra, right, the government was tracking how many flights a person is taking. So reverse, they were calculating what could be the income of the person. So in a similar fashion, the customers are in a habit to hide the information. Sometimes they don't know how much to disclose and what to disclose or how to disclose it. Secondly, when we move up the ladder, the customers do have undeclared income. So how do you manage that? Because when we want to assess a loan, we actually look at the fact what is the declared and undeclared income and what is going to be the repayment capacity. How do you tackle with that? And how do you, and again, it's not about us as NBFC or banks trying to tackle it. It is how can we generate trust in the customer that this cannot be misused. And if you see, when the news of the Digi Yatra came out, a lot of people quitted, stopped using Digi Yatra. So it's a similar cat and rat race. How do you take that?
So, with my experience, I can tell you, customers are transparent enough to share the information with the lenders, whether it is through digital journey or through, physical journey while they are applying for a loan. So, I have not seen concerns from the customer side regarding their data privacy. Regarding, how we are tackling with that challenge like declared and undeclared income. So you see that is not been an issue because for the informal customer, somebody who is not into a formal business, somebody who is not having GST registrations or audited financials, so there we do assess the income, and usually the customers have very low level of income, which might be say 4, 5, 10 lakh rupees annually. So and we do properly document that within our underwriting journey, and I don't think that should be a challenge for the regular return filers. That is actually done on the basis of the reported financials. So I don't.
Yeah. So I partially agree with my dear friend here. See, customer definitely is concerned about data privacy. That's a basic challenge any customer, and I'll keep the answer short because we're running out of time, and I have other colleagues also have to speak. So definitely customer is concerned with the data privacy, but lending, borrowing is always governed on the basic principle of trust. Banking means trust, and banking is not done by banks. Even NBFC does banking, right? Yeah. They are banks, we are NBFCs, but both of them are doing banking. I've been a career banker, I can assure you of that. So the basic premise is trust. When a customer is giving you information, he doesn't expect you to float around his information in the public. He believes that you keep it safeguard. How much can we do? Because today information is public. Today I want to retrieve any information. Obviously there's a consented data, non-consented data, all that. But still it's a public information, right? Some of the information you can draw without consent, like an MCA data or non-consented GST, right? But he definitely expects you to keep that data private. Now, second part of your question, which was very relevant, that how do you decide whether customer is sharing complete info with you? You can't. Banking again is based on the second most important rule, banking in faith, in good faith. When you reach out to a borrower, whether a personal loan, a business loan, or a corporate MSME loan, you expect whatever customer information is sharing. Because I am a JIB, CIB pass out, so I know how when we look at lending, it's in all good faith. Customer जो आपको दे रहा है, जो share कर रहा है, trust it with 100%, but you have to validate it. You have to verify it. Undisclosed income, unencumbered properties. You take calls on the information provided to you. You run your models of AI, credit scoring. We all use technology. You are often technology. We're all using technology in-house. But add a layer of judgmental lending to it, which can only capture when you understand the industry, when you understand the customer, when you have interaction with them.
So be more phygital.
Be more phygital. You can't take out the person from the AI. You can add AI to a person in the process, but you can't take a person out of the entire process.
Right.
It's very critical.
I completely agree. To understand the needs of someone, you need to have a human emotion behind it, because it's more judgment than just the data itself. So again, we are running out of time, so I will try to keep it short. I had a very interesting story. I'll just quickly wrap that story. I was traveling in an Uber a couple of days back, and the driver told me that, I took a loan on my car for 5 lakh rupees, and out of which, to reduce the interest by 2 to 4%, he had to pay the DSA 1 lakh rupee, right? Essentially, during that tenure, his EMI expense would have been only 10,000 more in the case of 2 to 4% of ROI, right? So what we are seeing is there's a huge growth of DSA happening in the country right now, and which is creating a huge ruckus. So how do you combat that via technology? Secondly, I would also ask Vineet and Vikas to take this question, because you are lending on a very wide scale. How do you ensure that? But because इसमें ना दो चीजें हैं. One is कि the right information and what are the potential frauds which are happening with the customer. The second problem is that while lending, so if I am, so let's take a simple example. I want a local guarantor. That's my lending model. That's also creating a nuisance and risk on the company side. How do you combat the customer and the finance company? And how do you solve that problem? Please start.
Yeah, so let me try and address the first part maybe, and then Vikas will contribute. So I think when we talk about, I think what the question that you put on the table is, the DSN connector word, that's a tool for a wider financial inclusion, and for all NBFCs, it gives you a channel that maybe you can't build on your own, or you will take a lot of time. And in the hindsight, there are risks of, false promises or wrong charges, which if in case the customer was directly interacting with the NBFC wouldn't have happened. Obviously, at one point in time, you would want the customer to be connected with you, but today is not that day. That is why the connector in the first place. I think there are more pros to this whole equation than the cons. And I think technology is also the answer. See, if you're able to bring, and we work with a lot of NBFCs who come up to Leadsquared and they want to stitch a system where, a DSA or a referral partner can refer a customer, and then they can start communicating to the customer, keeping the referral partner in loop. Referral partner also gets all the what's in it for me, the live incentive and all of that. If the customer is not in the umbrella of the IT system periphery, then there are chances that, a DSA can promise whatsoever he wants to. And we are seeing this happening in, I think I was speaking to you, in the tractor industry. Practically there is no MRP, right? In e-rickshaw, every shop to shop, the prices differ. Now, what can the lender do if the kacha in pro forma has been built by the connector? So I think the answer lies in technology. The lenders will have to design the ecosystem in such a manner that the DSA and connectors are not just connected, they are integral part of that ecosystem. And I think that's when this problem will start to fade away slowly. But there is time to that. Maybe Vikas, you want to add?
Yeah, a quick one. I think they are important part. Let's accept it. You can't, if you want to connect the dots, you need people there out there, and lenders can't be everywhere. This is one of the most critical distribution channel for us. You can use technology like what we have done in one of our retail products. We have create interface for customers as well as the partners, and they can come on, see. Secondly, I think RBI is also doing a lot, customer fact sheet, intimation on every single thing new loans which are sanctioned to customer, intimation to the customer directly, taking away the role of the partner, limited the role of the partner only to facilitator, not getting involved in the collections and all that. But would there be challenges? I think any system, we are one of the largest financial ecosystem in the world. It's bound to have challenges, but we're bound to outgrow them. We're bound to become better. We're bound to scale it up. And I think we are doing a fantastic job. Our regulators are doing a fantastic job. People on the dais are doing a fantastic job. I think we are on the right direction. I don't think so we can dwell upon more. And I would request Ankit really to speak because no points.
I think you've added. I think I can add just one short point. The risk that you just highlighted, that might happen without even a DSA.
Right.
So, sometimes salesperson within the company, they might miscommunicate to the customer about the approved loan amount or the ROI, which customer might not be able to understand. So I think you need to design your processes in such a manner that you need to address all such risks into the system. Probably you can communicate directly to the customer through a centralized desk or through the digital means, things like that.
I have so many follow-up questions on that, but due to the lack of time, I will skip that for now. So Ankit, financial services has long been a privilege than a right, but education has always been a right. Why do we not see a lot of companies stepping into the education loan space? I know you have tremendous experience. I have had some experience in education loan, delivering small school fee finance, something like a 10,000-20,000 rupee loan, which generally makes the career and life of a student. Why are still NBFCs hesitant towards entering this space?
I can't answer that in 4 seconds, but
I'm not asking
to be honest, I mean, we'll have to make. I think the answer shouldn't be. We should not look at it from a. It is a right. Education is a right. But I think there is this tendency of we need to be clear whether it's a capitalist approach or whether it's a socialist approach. I think trying to mix and match and sometimes do a socialist approach and then do a capitalist approach and then expect a write-offs to happen, that is what will make a lot of an issue, right? So there might be questions with the whole education policy itself and the administration of it. Like he mentioned, to be honest, the answer is we are evolving. I mean, there are decent efforts being put in. There will be bumps along the way. But I think that if we are progressing, it's better. I mean, if you look at 10 years ago, for a student who was going abroad for higher studies, and that is why I started Gyandhan, there wasn't any loan option available. Now there are multiple NBFCs. There are private banks as well getting into it. So the ecosystem is evolving. When it comes to skilling segment as well, the recently launched government scheme of skill development loans and a lot of NBFCs getting into the space, those are part of it. I think but the clear answer, at least in my mind, is we have to be clear in terms of we should let the markets do what they do and not try to intervene in them with the shocks and surprises.
Right. Thanks for that. So Vikas, we have huge, long, clunky forms. Post disbursement, we have those chatbots. That's something that we've already started implementing. So what is it that you would want to change in the whole fintech scenario that improves the customer's experience? If you can quickly, change one thing. And Divaker, same question to you, because you work in an MFI space where the customer come from the most rural backgrounds, right? Their education and literacy level is very, very low. So what is one thing that you both will change? First from you and then from Divaker.
See, the customer, when it approaches anyone, be it a fintech or a lender or a channel partner, the only thing which he needs is when, how, what. What will I get? How much time you will take? And what will be the pricing? What is the timeline attached to it? So if we can create the visibility to the entire journey to a customer, and not just retail, individual customer, a corporate, MSME, personal loan, business loan. Today it's a black box. I've met so many customers over the period of time. The moment he logs in the file, उसको commitment DSA बोलता सर कल हो जाएगा. Bank बोलता है, I don't know. Abhi, my analyst is looking at it, my credit is looking at it. So if we create some enability, and it's an ecosystem problem, it is not an individual problem. A DSA cannot do anything. A bank cannot do anything. They have to create a seamless platform where the customer knows the entire journey and the estimated ad. That is very much happening in supply chain of a large corporate. When the purchase guy knows kahan se kahan material aane wala. So I think financial institution also or lending ecosystem also require that kind of visibility for a customer.
We need something like a ship rocket for...
Yeah, absolutely. A ship rocket for a customer. Yeah. Trust me, because he's planned. Somebody has taken up his personal loan for getting his daughter married. Somebody wants to make a new purchase. I have seen so many people, borrowing from secondary market because they don't get money on time. Right. So I think that visibility is the basic customer experience if we can create for every customer, not just a retail customer, that would serve a lot of purpose.
I'll just add an example here because there have been cases in the past where a customer has called me and asked for a loan and I've told him we cannot help you with this loan, but go to the other lender. This is the best lender for you. And those are the customers who have then referred multiple other customers to us. So I think goes back to it. You have to be clear with the customer. When can you do it and in what timeline?
Yeah, I mean, education of the customer, the right finance company is also very important.
See, in a dynamically changing environment in financial domain, financial ecosystem, three things have to be focused, I think, which are focused at least as far as microfinance domain is concerned. One has to be personalized experience. The second has to be digital first or mobile first approach. The third one is transparency, which of late, as RBI has taken the front seat in ensuring that. And these three things are pertinent in entire financial ecosystem, whether it is NBFC, bank, a fintech, or a microfinance institution like us. And obviously, when we say, we must remember that entire digital transformation or digital journey cannot replace the human touch. The human touch has to be there because there is a trust, there is a transparency which you have to build on the field with the localized approach with the customers. And that is important to ensure that. Hence, the term called phygital plays a vital role here.
Right. So, Anamika, just one quick thing. If as a customer expert, experience expert, one thing that you would want to change, what will that be?
See, I just want to make a point over here that while we are trying to digitize most of the processes in customer experience, we have to be very cognizant that we balance it out with the human intervention. Mm-hmm. We cannot do away with the human processes, which in very recent past I came across a couple of organizations who claimed that they have removed the human process completely and they've got to the bots. We have also incorporated bot-based processes for our processes. One of our, I would want to, mention about. So we have a process where we welcome the customer, giving out all the information about the loan, the ROI, the EMI, and other details through a welcome call, which is very much similar to every other NBFC or banking processes. Initially, we used to have that through a human-based process. Then we moved to a bot-based process and 100% coverage, our contactability increased, so on and so forth. Having said that, when the management said that, okay, why can't you replicate this process for your normal call center or let's say a query management process, the answer was no.
Yeah.
Because over here, I'm trying to put across an information to the customer which the customer might or might not want to hear. Our endeavor would be to pass on as much as possible to the customer. But when the customer is trying to reach back to the organization, at that point of time, I have to give him that comfort and space so that he can comfortably disclose and share all the information that he's facing a trouble with.
Right.
I cannot be then just asking him that, okay, you go through the IVR tree and go through the bot-based process. We do have the IVR-based processes also. And we have evolved because when we started, 3 years back when I started digitizing the processes, we were somewhere around 10% of the IVR that was servicing the customer. But today we have evolved and taken it up to, let's say, 35 to 40%. So 40% of my queries are being handled through the automated bot, which is there on the call center queue, right? But still I have 60% calls landing up to my user, right, which cannot be replaced through my IVR tree. And this I have to balance as an organization. I cannot expect to be, so I won't be naming the bank, but we all know that we have few banks who have made it extremely difficult for any user to reach to the customer service. You will go round and round and round and you will go through multiple layers of IVR, but you will not be able to reach to the executive for which you are calling.
So,
we don't want to land up into that.
So what you mean to say is, and that's a very good point, I think we've already started disseminating information. I think every company has started doing it for EMI reminders. But anything when it's a one-way communication, especially, that's what we do with our teams also. One-way Zoom call works, but when there needs to be a discussion, we need a person back. And that's, I think, a very valid point. I think if we can introduce one-way communication via bots or via IVR method and integrate it with technology, the technology dictating, iska ROI 28 hai, iska 22 hai, whatever. And so that's a very valid point. I think that's a great insight. I think I will implement that tomorrow in my organization. Thank you. At least I'm getting something back. So lastly, Divakarji, microfinance has been an empowerment engine when it comes to, bottom of the pyramid. How do you see and what do you see has changed in the last 2 years? We're not talking about collections right now. Just, we'll come to that later. But yeah, how do you see the whole microfinance institution, and especially post-COVID? How it has changed? What has the customer perspective changed? What do they expect today? Because earlier there was a GLG and everything, and I think that is going bust right now. So what do you see there?
Multitude of things post-COVID, because the experience the customer is wanting is humongous. Today we have a mobile application which is given to the customer who can view the repayment schedule, the entire outstanding payment, last payment paid, the last payment missed, everything she can visualize. Plus, few players have gone ahead in implementing the payment gateways in the mobile application. Have we ever thought, before COVID or probably just 2 years back, that this was the rampant change which we were trying to bring in microfinance? No. This is the customer experience which today microfinance customer is wanting. Similarly, we have eKYCs, OCR-based solution, which is ultimately AI. Nobody would have thought the AI to be introduced in microfinance sector.
Right.
Much before it is still to be penetrated in many ways in other fintechs or NBFC space.
Yeah.
So we have everything like from OCR till eKYC to e-sign, AI-based credit tool engines, the automated underwriting. There is no manual intervention of any credit manager or the risk manager in the entire microfinance space. And hence the TAT has been too, and hence as I keep saying, microfinance is a simple business. The more you automate, the more it becomes simpler. But do not forget the human touch. It is quite important and critical.
So now talking about the pressing point today, that's something that we've been listening to for last 3-4 months, microfinance and the collection situation at this point of time. What we've seen is that a lot of customers are stricken by the circumstances. It's not that they are willful defaulters. How do you now create two things? One, create a repayment track through which they can actually repay the money back to the lender, because that's something that they want to do. It's just that they're stuck in a situation where they cannot, and especially with loans from multiple NBFCs or multiple MFIs together given to a customer. Secondly, how do you improve the overall experience of the customer so that they don't feel stressed about, and how do you essentially improve the experience of the customer while restructuring or implementing your first strategy? And I would ask Himanshu to weigh in on this, because you've looked at too many microfinance proposals. You are a wholesale lender. He's a lender to me as well. So मेरी transparency तो ठीक है. But how do you manage that when it comes to giving customer experience of a microfinance customer who's already under stress but not a willful defaulter?
Yeah, see, obviously, while collection is at hit as of now in microfinance sector, but I'm very hopeful as we speak. This will definitely be improved in the next quarter or so. But yes, having said that, we have to follow the empathetic approach while collecting the EMIs or the dues from the customers, which most of the organizations are doing currently in the industry, which were not following. Plus, we also of late we have new set of rules in terms of guardrail, which we call it as a common terms, which SROs have taken and played their roles, which definitely will improve the collections and obviously the business in time to come. And yes, the one thing which is still missing, which in fact Mr. Gigi Memon spoke about this morning, the solutioning part of how do we compute the household income in a correct fashion. That is still missing out. That probably the entire industry is working on it, and we expect few players, critical players in fintech, to help us out, so that we have that particular tool solutioning around it, so that we have that business going forever.
Right. Thank you.
So I'll talk more from overall lending, not particularly from the MFI point of view. So today, the risk that I see in the industry is multiple lending happening to the same customer. But we have seen that happening in the MFI space, or in the fintech space, or business loan space. Particularly, unsecured lending space. That risk we have seen multiple times, and so what I would like to change, if as a industry, maybe as a lender, we can be more disciplined while we give loans to the customers. I don't know like how that is possible. Probably the maybe the bureaus could support in terms of alerts in terms of whenever the customer is going to get a new funding, or maybe some kind of covenant that we can put on the customer, or maybe in MFI we have seen through the the SROs putting regulations around that. So we have to come up with the innovative solution to stop the over leveraging of the customer, because that is a circle, and that comes back onto us.
Right.
That we need to prevent.
Right. So Ankit, moving into your domain, education loan space, right? When we do a loan to a customer which has a moratorium component built into it, and you're betting against the future income of the person, and that's one of the major reasons why a lot of banks and NBFCs have shied away from getting into the education loan space today. So if tomorrow a student where you had betted that he's going to, let's say, an IMA, and he's going to get this kind of a job, and he's going to be able to repay the EMI, now he doesn't get a job. How do you manage that, and how do you improve the customer experience? And what other than, and it's not about just customer experience, what you as a lender or as an industry can we do to make sure that we help the customer out, not just by giving loans and maybe adding value added services over there?
So I think there are two aspects to it. You asked about if he doesn't get a job.
Yeah.
I think the first aspect has to be, you have to be able to predict if you're lending in the right segments. Because a lot of reasons why you asked the earlier question, why are many lenders not doing it, is because the segment has seen historically high NPAs. And that has primarily been because whatever lending has happened is, you have not really seen, okay, if he or she does this MBA program or this BBA program or this ABC program, what the employment odds will be, what kind of salaries will he get? Will he or she be able to repay the loan? So I think that is the first aspect that any lender should be trying to look at. And that's why even if you look at if you look at the private lenders segments where they operate in, they are predisposed towards certain segments. So the first thing is, as a lender, responsible lender, you have to do your due diligence on that front. It's not just doing a customer level underwriting. You have to do a segment level as well to see, okay, am I lending to the right segments also or not? Now to the second point, let's say to the example of someone got a loan for an IAMA and kind of he or she is not able to get a job after they graduate. I think there it really will depend on lenders, but I would assume most of the lenders are empathetic towards that. The key question really there also that needs to be ascertained first is it a willful default or is it a non-willful default, right? Because there are times when people will default with the expectation that, hey, this is a social good, right? So someone will write it off at some point in time. Now there, I don't expect any consideration to be made. But in cases where there is essentially a genuine reason, there is forbearance. There typically what happens is we have had cases where we tell, okay, fine, we'll give you a extended moratorium for another 3 months, right? You go and find a job, or we will restructure your loan, right? So there are multiple options because, at the end of the day, as a lender, it will hit my P&L as well, right? So, our interests are aligned, so at least to that extent, to be honest, right? But in my mind, at least in the education sector, the biggest issue ends up if you're not doing the initial assessment.
It's like any industry, any other industry. You just need to understand the industry, predict the underlying risk, and the most important thing which most of the lenders miss out is price in that risk. If my loan book is susceptible to 5% NPA, how can I lend at 9% or 10%? I need to lend at 15%. So that my adjusted return is as per my target returns. Number one. You talked about education loan. You look at US. It's the worst book in US.
Right.
Why? because they don't take personal guarantees of father, or they don't take the collateral of father house. They give actually education loan for education only basis individual, because father says I have nothing to do with you. Right? Here, how we do education loan, we take personal guarantee of father also. Sometimes we ask for collateral also. In some PSU cases, they ask cash margin from father. So that's why our education loan slippages are lower. So be it education loan, personal loan, business loan, MSME loan, corporate loan, you need to understand. And within that also, which segment? In education, are you funding study abroad? Are you funding top tier colleges? Are you funding students who are taking additional courses? You need to segregate the customer segment, build it the industry customer segment, and then calculate the risk, price in the rate, take the product, and then look at the distribution also. Which geography you are distributing, whether you are distributing in a geography which is susceptible to higher. So it's a matter, it's a risk which is pertinent to all industries. It's where the experience, where the analytics and technology also come into play. Very important, technology. And then basis that you can build your customer experience layer, which you keep on asking at the end of the day, how will you build a customer experience? So you can build the customer experience layer around it.
Absolutely. I mean, I'll give you a personal example. We do quite some education loans. But again, then we know what is our capacity and what kind of loans that we can do. So we personally, so it is also, because there's so many strings attached to a lender also. So for example, when I do an education loan, because my book is very small, it's what, 350, 400 crores. I cannot do a moratorium based loans, and I cannot further extend moratorium because my lenders won't lend me if I keep on doing that, right? So I do education loan in a space where we only fund students who are going to Canada, and where we know, this student is not going for education. He's essentially going to go and start working from day one, right? And what we've seen is that there is zero DPD on those loans, and we make them a borrower or a co-borrower. So yes, so you cannot. I think one of the key parameters is that you cannot take the industry standards as they say. You have to evolve it according to what your personal space is, what is your risk-taking appetite, etc. So. Do we have time for audience questions? Yeah? Okay. So if in the audience someone has any question, we're willing to take 2 questions at best. Yeah.
Hi, I'm Akshay. My question is to the entire panel. So, in today's inaugural speech by Mr. Memon, he said that the MFI and the lending industry is under a lot of stress because of over leveraging. Now, we all know that majority chunk of the sourcing is done through DSAs for most of the NBFCs. So how does that impact the experience? Because if the customer is over leveraged, he's not able to pay the EMIs, how does that impact the customer leverage, and what all we can do from our own end in order to, change that experience so that even if the customer is under stress, we can actually help them out and improve the experience so that the customer chooses to come back to us as a lender.
Vikas,
Yeah, sure. I think very, very, very pertinent question you have raised, over leveraging. This is the biggest challenge lending industry is facing today. What has happened, if we go back, I'll just quick 30 seconds more on this. Past few years, liquidity became easier. A lot of lending institutions came into play. Everybody was under pressure of growth, Everybody wants to grow 30, 40, 50%, and lending institution. And how do you do it? The customers' profile were also increasing. Economy was doing very well, 7-8%. It is still doing okay. I don't want to comment more onto that. 7 to 8% growth onto that side. Right? So now, but the problem is everybody is running after the same set of customers, trying to give them great propositions so they can take the money and grow. Happening with individual, happening with businesses, microfinance segments. So the greed of institutions to grow faster has to some extent participated in the problem which we all have. Now, how do you address it? First of all, as an institution, we have to take a backseat and figure out we can't grow 30-40% every year. The economy has to complement the growth, right? If there are concerns, let's accept, address, and say we don't want to do it, right? And that has to start from top. If I am seeing a particular industry is not doing well, yesterday I was in a geography, I don't want to name it, I was unhappy with the credit behavior there. It's somewhere in north. And I came back, I said, let's go slow in this territory. I have a growth target. I've given a growth target to a team to grow 30-40% a year. But I said, let's not do it here. Because the culture is deteriorated. People are talking about settlements, business loans are settled at 10-20% nowadays in that geography. I said, I don't want to lend it to this because the credit behavior is changing. So as an institution, as a lender, we have to first of all acknowledge that there is a problem. Secondly, we have to identify where is the problem. And third is not just find a fix, but walk that fix. That second most important point, use tech. I think we are only right now focusing tech on sourcing and to some extent assessing. There is a lot of deeper AI-enabled systems, credit scoring models available, built by fantastic entrepreneurs. I've been personally investing in a lot of these companies. I'm on the advisory board of a few of them also. Fantastic solutions. But the problem is, again, when they reach out to a lender, they said, are you a Perfios? Are you a Leadsquared? Are you a Karza? They don't want to give an opportunity to new guys on the block, And nothing wrong with it because they have proven, they are tested, they tried. And it's a lender wants to take an easy way out. They said, I don't want to trust a new guy. I want to trust a guy, a trusted one. I also took that call. I'm using Leadsquared. Why? Because I didn't want to give an opportunity to some new guy. So I'm no different, right? So I think that's where the thing comes. I think we should be open in a mindset, access, evaluate newer technologies, and take a conscious call using some and take a right decision. I think that problem is addressable and people will eventually start addressing it.
I believe that it's a big of a BHAG, but again, then more and more organizations in a particular location should also start collaborating together. So what we see, a lot of the reasons why a lot of microfinance loans have gone bad is also because of the fact that mortgage loan company, and I've seen that happening personally. I credit about 20% of my portfolio personally every month. So that's how I know. They will do a BT of a microfinance loan thinking कि अब तो customer को मिलेगा नहीं, but he doesn't know कि जब तक मैं report करूँगा तब तक वो MFI से call loan लेके आ चुका होगा. So we kind of have to evolve our mindset as well while disbursing of the loan, that what is the real potential and what we have to look while assessing the customer. We have to collaborate and not think we are above on the food chain or not. But Anamika, same question to you. How would you?
See, I would not be talking about the business fund, but when it comes to experience, this is one of the pain points that we have been facing all throughout my stint in the BFSI, that people have taken loans, they are unable to pay because of multiple reasons. Now, where the experience gets very bitter is the way recovery is done or attempted, let's say. Because one part is that they're not able to pay and they're sharing that experience with you. They're sharing the reason they're asking for a moratorium period, which the organization is declining. But if you're declining, you do not have to be rude. You do not have to make calls to the entire contact list of that customer, which has been happening very, very frequently. It has been repeatedly reported to all the authorities and especially to the regulators also, and the regulators have been coming back to almost all the entities that this is very, very unfair practice of what you're trying to do with the customer, because you were the one who went through the entire profile of the customer and you decided to lend to the customer. Now the customer is in a situation. Now as an organization, if you're not able to offer a moratorium period, what is it additional or extra that you can offer, rather than just harassing the customer in the way you're recovering? So I think there we have to take a step back. Not as an experienced team would I be able to make too much of comment on this, but I can just recommend the business teams who are actually in contact with the customer to refrain from these practices, because this at the end of the day boils down to the sour or a bitter experience which the customer will be sharing with 2 of his peers or 5 of his family members, and through word of mouth all the good things which I've done as an organization will be ruined, because the customer will say that इनसे लोन मत लेना, इनके तो लोग घर पे आ जाते हैं. They will be calling your colleagues, they will be calling your neighbors and your relatives, and finally what will happen, that you are ruining your own brand image because of few of the ill practices which are not directly responsible by the business team, but actually are responsible in bringing down your revenue, the future revenue which we were anticipating, you know. And this is all the, I mean, from an experience perspective, I'm just trying to make a point that if the experience goes sour in the customer's mind, no matter what fancy products we're trying to sell to the customer, no matter how much we're spending on the acquisition, it will not yield any result. You will be just burning your money.
Thank you. Now, moving, do we have another question from the audience? Okay, great. So I have a very small round. Now I want you guys to only answer in 2 to 3 words. That not more than that. It's the end of a session. It's a quick rapid fire round. So can we'll start from you, Vikas. Biggest disruptor in NBFC and fintechs right now. 2 to 3 words only.
Biggest disruptor, I think rise of AI. Secondly, very exciting in fintechs on the credit assessment and EWS, early warning systems, very, very critical. And the third most important is how some of the fintechs are focusing on ecosystem play, not the transaction play.
Okay. Yeah. One word to, so we'll move into one question only because I'm getting calls round above. One word to describe the future of digital lending. Only one word.
Built on intelligence, I think.
Okay. Yeah. That's a bit more than one word, but I'll take that. Most overrated trend in fintech today?
AI.
Most underrated factor in customer experience?
Maybe I should say turnaround time to service.
Okay. Biggest challenge in financials inclusion? Oh, we got the right question for you. Yeah.
Addressing the customer concerns on time.
One fintech innovation that you wish had existed today?
Fintech innovation. I think we are pretty much there when it comes to technology. So I can't think of any more innovation right now, which is on my wish list.
Right.
Technology is doing a great job. We just need to leverage it more.
That's been great. It's been we spent a good time talking about it. I'll just like to end. One of my personal views is, luckily it got carried away with the question itself. That we don't essentially there's so many times that we are looking to build a solution for finance space. Sometimes what we forget is there are solutions already available, which can be directly deployed in our business and can improve the efficiency of the business. I can give you multiple examples, and this is something that we do on a daily basis. One of the biggest problems being cash collection. What we have implemented in our organization is that we saw that हम लोग Uber में बैठते हैं तब OTP exchange करते हैं. Right, we take a parcel of 10 rupees which may be coming from Shiprocket and we do a OTP exchange, but we collect an EMI of 50,000 rupees. Why can't we do a simple OTP exchange over there which prevents fraud totally? So my last thought would be, the customer experience in finance. We don't really need to start building solutions. Sometimes a small little innovation from a different industry is enough to bring about a major change that can happen and that can service your customer. That's been our time. Thank you for the audience for being so patient, and thank you for the panel. Thank you to the panel for being here. So we can come around to have a quick photograph and then always.
Fruitful insights. And now I would request Mr. Anupam Gupta on the stage for the memento session. Take care. A huge round of applause for all of them.
finally my turn.
I would request everyone to please come forward for a group photograph.